What's up, everybody? This is Simon from W3MCT, and we're here to give you an update of what's going on in the market. I've been working on some new features and just UX UI when it comes to presenting information to everybody. So what we're gonna do is for this channel and moving forward, we're gonna have information available for you. And what I'm gonna do is just each day I'm going to come to w3mct.com and we're just going to go to our news section. So I created this using AI tools. And if anyone is interested in creating their own AI application, you can go ahead and actually sign up or reach out, contact me right here. You can go to it. If you go to our homepage, it will bring you where you can just view some more information related to that. And if you're interested in our services, you can go ahead and click get a quote. It brings up an AI chat to schedule. Definitely recommend downloading our free ebook. It goes over of how you can use the conversational AI playbook in your business. Absolutely free. Go ahead and put your name and email address. But that being said, let's go check out to see what's going on with the latest Web3 and crypto news. So this is curated Web3 and crypto news that will be on the page. You can come and check it out anytime you want. But we're going to use this as our news feed for each channel moving forward and what's going on to kind of just get a vibe and sentiment check and a little bit of a mind share of what's going on as well. And then after that, we're going to go into the significance of Bitcoin falling below 100,000. And I just have some boring graphics that we can go over and just what I've been seeing across the board. And well, what can we do with this information as traders and investors, right? So stick tuned and let's get to it. Right now, for the trade of the day, we have, actually, let me move this. The trade of the day, well, I guess it's not the day anymore. Yesterday, with my Web3 group, we went over Aerodrome and we're preparing for Aerodrome. Our entry area was really around the 75 to 68 level. Looking to stay within consolidation, a nice range. You can see we have a little bit of movement, but with Bitcoin still kind of weak sentiment, I can see this pulling back, and I don't know if it's going to go break out to new highs, but we do keep our trades really tight. You can see here we got type risk, stop loss, and our target. This is just recommendations. It's not financial advice. But if you are interested, you can join our club and get into some trades. So it looks like CoinDesk 20 performance update. SUI gains 9.6%, leading index higher. All right, so Avalanche joined SUI as a top performer, rising 9% from Tuesday. Ripple raises $500 million at $40 billion evaluation following the surge. So Ripple announced that it had raised $500 million from affiliates of Wall Street giants like Citadel Securities and Fortress Investment Group. Wow, that's crazy. Like, so Citadel Securities, if you don't know who Citadel Securities is, that's like the centralized location for trading and money and the stocks. Like, that is pretty crazy to have that support for Ripple. They really have some crazy connections. Yeah. So let's see. Bitcoin must hold above its 200-week EMA. Await Fed stealth QE qualitative easing and see if U.S. liquidity return after the shutdown, post-shutdown, to avoid a deeper bear market. 3 things that must happen for Bitcoin to avoid this bear market. I don't know. We'll see. Now, something that's pretty cool now people aren't talking about, right, is Bitcoin mining, right? So Hut 8. So if you don't know anything about Hut 8, well, you know what, I'm not going to get too off track, but Hut 8 did, earlier in this year, do some connections and collaborations with Trump Media and the family and his son on becoming like this new Bitcoin miner. So Hut 8's Tuesday tumble misguided and a buying opportunity. Investors overreacted to the absence of a hyperscaler deal announcement, overlooking Hut 8's long-term potential in AI, energy, and Bitcoin infrastructure. Now, I'm going to just I just want to show you what the stock looks like, okay? Because it is not as bad as that sounds. I mean, take a look at this chart. You're talking about, if we go to the 5-year chart, or not even just, recently, all right, Hut 8 has been on a massive run. Now, shorts will probably be heavy, and it looks like it could potentially return to the 30s again. Is it, who knows? Can it keep going? I have no idea. I mean, this thing is on fire, but at the same time, that's what makes me a little bit nervous, right? Because everything that goes up must come down, and we could see a nice retracement here in Hut 8 if Bitcoin and this market continues to have a weak sentiment and mindshare around it, but you never know, right? So what is this? Iggy Azalea joins token launched pad for celebrities on Solana as a creative director. The platform is co-founded by a former cannabis entrepreneur. Interesting. All right. Well, nice. Ripple raises, we went over that as well. What is this? Britain's digital ID push is premature and dangerous. The UK government is moving quickly toward a centralized digital ID system without the technological or legal safeguards to protect against authoritarianism. Interesting. What is C? So futures 30 round backed by Fulber Ventures, Tobin, and others. Right, Switzerland's growing role in institutional Bitcoin adoption. And let me see, we have some more here. If you're interested in reading more, go ahead to www.w3mct.com/news and to get the curated latest in Web3 and crypto news. We're also going to have the presentations in the presentations section right here. I will upload it at the end of the video. So if you want to go over any of the presentations from the video, they will be available on the website. And if you're interested in learning more about Web from other people within the space, not just, not myself, you can go to the webinar section, and we have a feed here for videos pulled from YouTube that we think would be helpful for you or anyone just wanted to get a deeper understanding of what this is all about. That being said, let's go ahead and continue, right? So what is the market showing us right now? The market is showing us right now, let's see, right? Bitcoin is up about 1.53%, Ethereum up 2.75%, XRP up 1%, BNB 1.5%, Solana 2.3%, and so forth. However, is Bitcoin at 1, and it wasn't that long ago that we were under 100,000. And so let's just go dive into some of these PowerPoints that I just put together for everybody, because, I could show you this, which is just like the Copilot. Thank you to Masari, but it's going to give you, right? This is a lot. Okay. And we're not going to read all of this, but basically this is the significance of Bitcoin falling below 100,000 threshold, some key significance of the drop. So we'll go over this a little bit, but I did take a lot of this and summarize it into an easier digestible PowerPoint presentation. So let's go ahead and pull that up as well. And this one should be downloading. So this is the simple web version. All right. First of all, let's make this easier to see. Okay. I hope you guys can see this all on my screen. All right. Bitcoin dropped below 100,000. What does it mean? Simply, easy breakdown, next steps. Let's go over it. Right? So what just happened? And this is the beginner friendly version, easy to understand. Right? 100K is big round number. It's fallen below and it scared people. It triggered forced sales. That flush pushed prices around quickly. Well, that's called volatility. This isn't unusual for crypto, and big swings often cool down afterwards. Now, what are we looking at here? So this is the price around 100,000. Okay, so this is 100,000, and since December of 2024, this is where we've been, right? In December 24, we were under 100,000. We got up to 102. We're at 100. came down, right? This is everything close to 100,000. And really you can see some kind of sporadic, but the volatility, recently in the 30-day has been between about 38 to 48. And that is interesting, right? Because I'm going to show you some more information. Now, volatility has been slowly decreasing over time. Over the years, the big swings are getting a little bit smaller. Why? Well, there's a little, potentially there's more long-term holders, bigger institutions, and better tools to manage risk. Or maybe, Bitcoin's starting to behave like a quote-unquote grown-up in the market. I don't know. But this is the long view of volatility. Right, so Bitcoin 365-day realized volatility on the multi-year trend. You can see, back in 2020, right, this Bitcoin volatility was over 80%, really, really high, right? And you can see even during, the bear market, okay, we were still around the 70% area of volatility. And you can see now where we are today, even though volatility has increased drastically, since all of this news recently, you can see that we are at a multi-year all-time low when it comes to the realized volatility of Bitcoin. Now, if you're investing, and this is not financial advice, right? I'm sorry about this. We'll go over it into the next one, right? So hold on. Let's get into the next one here. So now let's take a look at this. This is the Bitcoin below 100,000 investor VC style briefing, right? Some signals, risk, allocation, tactics. Again, this is not financial advice. This is the information that I use for myself that I'm sharing with all of you. So what are the executive takeaways, right? So we had a breach of 100,000. What does that mean? Huge sentiment shock, leverage flush, volatility still elevated, but it is normalizing. We have a 5-day ETF outflow, about 1.9 billion. And now on the macro, liquidity drives near-term path. It's decreasing. A long-term horizon volatility is going down, and it suggests that, maybe this Bitcoin, quote-unquote, internet magic money is becoming a mature asset with deeper liquidity. Now, we went over this previously, and this shows us where the price has been around the 100,000 threshold and the volatility around 100,000. And you can see that even though the volatility has been between roughly about 38 to 48, even gotten to as high as 55%, and most recently, it is still drastically down when it comes to long-term volatility with this new maturing asset class or digital asset, right? Bitcoin is a new technology. It's an innovative technology. It's an infrastructure growth play, and it is a solution to a problem that people don't know they have yet. And so as we are still in this infancy stage of this new asset class, we're starting to see a lot of positive results when it comes to long run volatility and the realized volatility multi-year trend. Wow. So what are the drivers of this volatility compression? So many of us have forgotten the simple fact that, Bitcoin, even though there's so many amazing technologies when it comes to web, AI, blockchain, this new simple, from a human perspective, right, and from a user's perspective, the ability to participate in the market, right, fractional investing, peer-to-peer interaction straight from your mobile device, as long as you're connected to the internet, right, all of these things, light speed transactions, this is advantage that many users allow to go over their heads, right? And they forget that, life before the internet was harder, obviously. Not because the game was harder, but it's because the time it took information to travel and the time to transact, took longer. And with so many parties involved when it comes to transacting, it really made things just, take way longer than necessary, right? So now with institutionals and the TradFi, traditional finance, and fintech, right? This new financial technology starting to collaborate, embrace blockchain, embrace just the thought to say, hey, we're gonna do an update, right? We're gonna upgrade this financial infrastructure. It is slow, and it's time to move to a higher speed rail when it comes to transacting from with one another and enterprise level, business to business, corporations to corporations, countries to countries, and so forth, right? So now the derivatives path, right, from the CME and options, this is better hedging, fewer disorderly moves. We have long-term holder supply that's immobile. It's reduced and tradable float. And the market structure, right? We're getting tighter spreads, improved custody, and market surveillance. Now, how well will this work out? We'll see. But something that I'm thinking about when it comes to capital allocation, like I said, it's not financial advice, but this is something that I'm doing for myself that maybe you might be interested in, is that, well, core thesis is we'll see, is that the volatility trending down supports a higher strategic allocation at lower target risk. And we're going to expect some more, episodic shocks, and, it's still a regime of risk on, risk off with the macro liquidity, meaning, right, we really don't know what's going on. Now, what are some actions that we can take from this core thesis? Is that, well, hey, we can stage our entries, all right, and continue to dollar cost average, rebalance on strength, right? We're using some options overlays of calls to cap drawdown and enhance yield, size exposure via the volume volatility budget, risk parity to RV, right? So really want to reduce your risk at this time, right? Don't expose yourself. Don't, right, chill out with the leverage. Why do you want to chill out with the leverage? We'll get into that in a little bit, but it wasn't that long ago that really over 350,000 traders were liquidated from this market move, and it's crazy that people are still taking these high leverage trades. But hey, to each their own, right? But that's not what I would recommend. But anyway, I'm nobody. I'm just a dude on the internet. So prolonged ETF outflows, higher for longer rates. We'll see, right? Corporate treasury for sellers. So if you don't know what that means, so the corporate treasury, right, for sellers, you're going to start seeing more and more of these treasury companies, right? So these digital asset treasuries, I call them the DATs, right? DAT, digital asset treasury. And these are going to be public companies that decide to take the responsibility to raise funds for Solana or for Ethereum or for Bitcoin or for Ripple or for XRP or for Litecoin, for whatever, right? And so they'll become a digital asset treasury, right? Raising funds to buy those digital assets, right? So eventually, those treasuries, will they be forced to sell? They are for sellers. When? I don't know. How long they want to hold it? Will there be long-term DATs out there, just digital asset treasury companies, or will it be shorter? We don't know. But that is a new thing that we need to pay attention to. And the next thing we also have to keep in mind are regulatory shocks. Even though regulatory regs and policy and support has been in the favor of Web3 blockchain, digital assets, and this entire ecosystem and space, however, it doesn't mean that once the Clarity Act goes through and there is, quote unquote, no pun intended, clarity on everything, well, who's to say that this new clarity will be widely accepted, right? Maybe it won't. We don't know yet, but that is something we have to keep in mind. And the next thing we also want to keep in mind as we come up to more of these weekend and holiday seasons right now, these liquidity gaps on the charts, just keep a track on those as well. You want to see really those slow down, okay? And so now here is why it matters and what's next, okay? And this is the last one we're going to go over, but Bitcoin under 100,000, why it matters, what's next, summary for investors and traders. Remember, this is not financial advice. This is information I use for myself that I am sharing with you. So we kind of went over this, but let's just do this one last time in some other words, right? So why the 100K breach is significant. So the psychological breakdown, right? So we're going to see the mind share shift a little bit, right? The loss of confidence around a major round number. People, when Bitcoin, got under 100, right, it's been comfortable at 100,000 for so long. Well, not really long, but to a lot of these traders and people with short-term TikTok brains, right? They think it's long, but essentially, it really hasn't been that long. But anyway, so they're losing confidence already, right? Because they are entering the market and they want immediate, pleasure. And everyone knows that has been a somewhat seasoned trader or seasoned investor understands that everybody pays market tuition. Everybody goes through a downturn. Everybody will see red in their portfolio one time or another throughout their investing career. So when new people are coming into the market, or fairly new people, or people that don't establish an edge for themselves through education, they aren't convinced and they lose confidence in their strategy or the whole reason of why they got in the first place. And then, so we call those people weak hands. And so, but those weak hands at the same time can say, well, man, there was just a liquidation, right? Between 1.7 to potentially 2 billion of record liquidations, right? Leverage longs wiped out in just 24 hours. Oh my God, what about that, right? All that money lost, okay? Yeah, if you are a leverage trader, you probably got liquidated, okay? But if you were a simple spot holder or a digital asset holder supporting a project, you are fine. Yeah, maybe did you experience some red in your portfolio that day? Well, go to the gym, do some push-ups, do something nice for someone else if you can't handle the ability of seeing the value of your portfolio decreasing. And it's fine. It's not a big deal, right? Hey, when there's days like that, I don't open up the screens either, right? And if that's what you need to do, that's what you need to do, and there's nothing wrong with it. Okay? Do what you got to do to position yourself to be most successful. And we understand that this is the beginning of a new asset class, right? A new digital marketplace, a new technology, an innovative space. You are not late, okay? You are not late. You are at higher risk not participating in the game than being concerned about short-term volatility. That goes to being, that being said, we went over how the volatility of Bitcoin has been decreasing over time, right? That's a good thing, and it's getting better. And so even though we see this correction that's been, greater than 20% off its 126,000, October peak, and we're seeing signs of a market fatigue, it's still not that bad. And use this as an opportunity to just really reevaluate your education around this new technology. If you are feeling nervous, if you are having some, issues about all of this or second guessing yourself, right? Take a moment to learn a little bit more about this technology and understand how this technology offers you an opportunity, right? A solution to a problem people don't know they have. I mean, this is an opportunity that doesn't come to the regular retail everyday individuals often. Keep that in mind, right? So, and the macro headwinds, right? We got sticky inflation, hawkish Fed tone. The Fed didn't want to come out and say blah, blah, blah for December, right? People are getting a little whatever about it. Inconsistency is never good for the market. Softer risk assets right now, right? People are pulling away from risky assets at the moment. And, with the ETF flows, right? A 5-day net outflow of 1.9 billion. What is the world preparing for? Okay, so there's a lot that's going on that gives plenty of reasons as to why you should run away from all of this. Okay, and so what's the downside, right? There's two scenarios. Downside roadmap, right? Risk, drift to 90K, 95K, right? Tail risk maybe to 72,000 if forced selling accelerates, right? All right. Continued. Oh my gosh, we get continued ETF outflows, tighter liquidity, equity weakness, right? Small position sizes, wider stops, hedge with options and futures. That's a downside roadmap, and that's possible. We never know. It could potentially happen, right? If the government shutdown continues it continues, if the Fed changes their mind, if something just happens, right, the black swan event that nobody's paying attention to, right, we can continue to see some more stress on this market. And we're going to see how strong these hands are across the board. Now that we got the doom and gloom out the way, let's just see, if there's a light at the end of the tunnel. All right. Well, hey, is it as bad as it seems? Like I said, the volatility is down. All right. That's really good. That means not as many people are exchanging out of their hands and trading Bitcoin. Number two is that, well, we did get a huge liquidation, a market reset, you can say, and that is healthy. A market reset for leverage, is great. So this is the leverage reset, and we rebound, right? We claimed the 98,100K, and we pushed to potentially 114, right? Next thing you know, we're going to be trying to reach for breaking out all-time highs. But I think when we do approach it, we will fail once or maybe twice before we do break out to new levels past the 126. So that is my assessment. And so what are the drivers? Well, if we have if the ETF decides, hey, we're going to get some more inflows, right? The macro sentiment around the economy starts to stabilize, long-term buyers start to step in, and we start to say, hey, you know what? Let's just participate in the market, and we're just going to continue to DCA, add on higher highs and higher lows, and let's just take this thing to the bank, right? So who knows? Well, not the bank. Just kidding. That was a joke. But anyway, my point is that when it comes to participating in the market, some people may say, oh my God, it can be, you're 50-50. It can go up, it can go down, right? You're not telling me anything. No. The point of all of this is that we want to be prepared with as much information as we possibly can. Because if we do go in a downturn, at least we're mentally prepared for those levels. And then maybe we want to put something to the side to say, hey, if it hits 90, I want to add to my bag at that level. All right. If you're saying, hey, if it happens to do a nice rebound, and then that, all right, it's cool. Let me diamond hands it, and then I'll just, keep it flowing. And let me not stressed out, and I can go focus on some other things, right? So this is why we do this, right? So playbooks, investor versus the trader. This is not financial advice. This is information I use for myself that I'm sharing with you, right? So continue to use the DCA, dollar cost average, to smooth entries during choppy weeks. Rebalance on your strength, right? Trim after sharp rallies and maintain allocation. Stay horizon focused. Short-term RV is noise. Relative volatility is noisy. Long-term relative volatility trend is easing, right? So that's for the investors out there, the long-term holders, the 5 to 10 yearser. Now, for my traders out there, okay, look, size by the volatility. Volatility did increase recently, okay? So you may have to reduce that size and tighten up your risk as the relative volatility has rise, right, around this new 100,000 mark. So the expansion, right? So if you have a low relative volatility, often precedes big moves. Now prepare for the breakout plans, right? So prepare for the opportunities for the shorts to close and potential reversals. Hedge and express views with options when swings are large. And that's it. So those are some informations that I'm telling myself, right? This is some news and it's a new style of how I want to present information to you all. And I hope this was helpful. Hope you liked it. My name is Simon from W3MCT. And if you're interested in learning more about my company, we help transform your business with Web3 and AI solutions. One of the clients here that we use on Lovable Dev, I created this amazing platform for my client called Leader Pulse, and it provides a vibe check of the current organization and whether or not there's an opportunity for growth to help reduce with turnover, build stronger teams, and a data-driven leadership. And we have ways to do this through our leadership assessment, and you can go through the program, test it out with the Google sign up as well. And if you want to create your own internet application using AI, you can reach me at w3mct.com. It's www.w3mct.com. Click on free consultation. Our AI agent will pop up, get your name and information, and schedule you for a free consultation today. Check out our free ebook that goes into conversational AI, name and email address, and it will download your free ebook there. Have a great day. Catch you soon.